This is our Forex blog for April 18th, 2012, and this is the second day of showcasing our Build Your Own Trend currency meter. This is just beyond phenomenal for many reasons. One, I have got it to work on a range chart. These are synthetic symbols. They don't exist. We don't get them from eSignal. When you put star GBP, star USD, star JPY, star EUR, etc. in there, we know to statistically compare all the pound pairs, dollar pairs, euro pairs versus all the rest of them. Are they going up or down? What percentage of currencies are they going up or down against, using various statistical models we've developed? And we also have two statistical intensity models that are averaged into this, into one easy to read indicator. And because it now is placed on a range chart, if there's a lot of bars moving up, there's more bars here. You have a lot more granularity. When the market's not moving, you have fewer bars. As you can see here, from 9:30 to 10, or 10, what is this time right here? 10:09, 10:30, not much action. During this next half hour, there's a lot of bars. During the dead times, there's fewer, as you can see last night. 21, 27, 41, that was a 13-minute bar. Some of these bars right here are less than one, not even 1 minute long. So when the market's really exploding, you have a lot more bars, and it gives you a much more intuitive feel than our older FX Trend Pro currency meter. As you can see, each of these bars shows you the strength or weakness on one 5-minute bar. Notice the strength right here, followed by very little weakness. That's always been a pattern that's likely to continue. The daily, weekly, monthly trend is up. The pound's very likely to go up. You want to buy that versus the weakest currency. This is one of the easiest ways of trading, for new traders. You want to buy the strong pairs versus the weak. And when you have a strong pair that's strong on all time frames, real time, daily, weekly, monthly, and keep in mind the real time trend allows you to customize these settings to fit your style of trading. These are the ones I use. 15% weight to 5-minute trend candles, 15% weight to 15-minute bar power index, 10% weight to the 5-minute bar 3x3. This is extremely fast. 15% weight for a 5-minute bar Fisher. This uses very advanced math to oftentimes show trend reversals 1 bar earlier than the real move happens. And then the two bottom ones show trend intensity. How intensely is it moving compared to the past? And so when you average those all together, you have some directional tools, some intensity tools, and it's just, and because it now works on range charts, it's phenomenal. So last night the pound, incredibly strong. At that time the yen was the weak one. You want to buy the pound yen. So let's bring up a pound yen chart, and you can see that trend, just exploded up 129.30 all the way to 130.40, over 100 pips. And most of you are going to want to use a range bar chart here. So let's say you missed the beginning of that trend. Let's say you spotted it right here. Using our range charts, and you can see the incredible momentum here. The real-time trend's up, the daily and weekly trend is up. You buy this breakout right here, and then you just simply use our trailing stop to get out. Notice it caught every pip. It got you out of this thing around 31 and went all the way up to 40. Caught every pip but 9 pips. And so you're in this trade, you're risking very little amount, 10 or 12 pips, and this trade just keeps going up. And of course, when it's above the upper containment band, you can certainly, when it goes sideways here, you can exit half and exit the other half when the trailing stop gets hit. That's what I usually do myself. But the currency meter, especially the range-based one, just did phenomenal for letting you see that. Now, another one that was weak last night was in New Zealand. It's very intuitively obvious when you see incredible weakness for a lot of bars, and then the pullback really has almost no strength. That weakness is likely to continue. Its daily trend is just barely up. Its weekly trend is very weak, and the monthly trend is insignificantly up. So buying the pound New Zealand also makes sense. Let's bring this up, pound New Zealand, and take a look at this. Exploded, 94.25, up almost 200 pips. So, if you got into this trade here, had a small, well, not a small profit, had 75 pip profit, nice little sideways rectangle pattern breakout, 92, 36, almost a 40 pip move. You might have got into this trade right here, 40, went all the way up to the whole number. That's a 60 pip move. Just incredible momentum. You buy the strong pair versus the weak. And of course, the Swiss was also weak last night. Buy the pound versus the Swiss too. I would predict that this probably went up 100 pips. I didn't trade this one myself, so I don't know. All right. Went from 4,600, 4,710. So, a little bit more than 100 pips. Let's say you missed this first move. In the past, I've always been a very cautious, conservative trader, and one of my rules is not to chase markets. If you miss the first move, wait for a pullback or wait for a little sideways consolidation like this. With this new tool, I'm trying to condition myself to break 10 or 11 years worth of trading habits of never chasing currencies, never chasing stocks, never chasing futures. I've traded a lot of different markets in my life, mostly only Forex now. But the point is, usually when you chase a currency, let's say you miss the move, it shoots up 20 pips, you don't want to buy it when it's up there 20 pips. You need a continuation pattern, like a little bit of a sideways action. When it breaks out, you get in. 30 minutes is usually my minimum. Or what I prefer, my preferred choice is that, let's say market shoots up 40 pips, I miss that trade, pulls back 15 to 20 pips, pauses, starts to go back up, I get it. And that way, if the trade doesn't work, usually the momentum causes it to go back up to the highs and it double tops, and then that's the end of the move. So you have a chance to make 15 to 20 pips if the trade really kind of stalls out. And if it breaks out and makes a higher high, which oftentimes happens, then you have, potential of a huge move. With this new tool, I'm trying to get myself to do this, and I, would advise you to experiment with, very small lots compared to what you normally trade in terms of chasing currencies, because the new one is much more intuitive, and, especially on a range chart. This is a 5-minute chart here, but this is kind of a continuation pattern. I would have taken this in the past myself. You put your stop right underneath the bars low, you get in, and this just takes off. And you can see it went from 46.30 pretty much straight up, went sideways at our trading zones right here at 80. It's a 50 pip move. Actually, 55 pip move, because we would have been in at around 46.25 here. So, when all the time frames line up, it's clear that's what you want to do. You can also see that the dollar was very strong last night. The daily trend was also up. However, the weekly and monthly are, pretty intensely down and somewhat down. But if you're going to trade this against, the weaker ones like the euro is extremely weak. So you want to sell the euro dollar. A lot of people love trading the euro dollar. So let's take a look at this last night. And keep in mind, one of the new enhancements to our software, we released this yesterday, is with the pivots, if you want the lines to not go across your whole chart to make it more intuitive, you want to see where those levels are, but you don't want to cloud or confuse yourself with too many lines of support resistance. We now have the option of putting a minus in front of this, and what it does is it puts the daily pivots on your chart. It goes across the screen 30% of the width, but the minus places it on the left-hand side of the chart. In the past, if you added that to your chart, it would be over here on the right. It's good to see where these pivots are. You can see the daily pivot. The market had trouble getting above it last night. The hourly right here, of course, the trend is going to be down. This is an S1 level right here, and it was also the previous day's low. Support area. By not having these on the chart, you don't know where they're at. The next level down was this midpoint right here, which you can see pretty much was the low of the day. And it certainly was the low between 6 and 7:30 when it went back up about 20 pips. So having these daily pivots on your chart, I started doing more classes on scalping because people have requested them. And it's also one of the ways I trade myself. So I would say of all the different methods I teach, I'm most expert at scalping because that's, I've done literally thousands of trades scalping. And, pivots are a major component of that. So the new release has the new build your own trend, which, now works as a currency meter for the synthetic single currencies. And it also now works on range charts. Remember, 6 pips per bar if the market's moving a lot, there's a lot of bars. You have granularity on each of them. The only downside of this tool is it only works live. There's no way to line it up on past bars. But it's just so intuitively obvious how to trade. So the euro was weak, the dollar was strong. You saw on that chart that you're looking for sells, down, down. When it gets to the lower band, that's usually the end of the move. You now have these pivot levels here. If it busts through this first level, you might use this as your next profit target level. This is a Fibonacci retracement level I do each night for you. But later in the day, 9:30 here, the euro started to show some strength, and the dollar was no longer strong, as you can see. See that? Strong euro, weak dollar. Also, the Swiss was extremely weak last night. So strong dollar, weak Swiss. Obviously, you want to buy the dollar Swiss. Let me bring up a range. Well, we'll just use the 5-minute chart, actually. So you can see, basically, by this breakout, went up only about 15 pips. You bought this little pullback. You probably broke even or lost 5 pips. And then when it broke out again, you're in. You always want to draw your fibs on the last swing to get an idea where your profit target is. I would have probably bought it right here at 74 and got out at this fib target right here. Notice our trailing stop didn't get hit. Most of the time, the fib target is going to be your maximum profit. It's at our upper containment bands, very likely reverse. So that's it. I'll leave the currency meter up as the last thing that you see. Buy the strongest ones. If the real time matches the daily, which matches the weekly and the monthly, it's on days like this, it's a no-brainer. Sometimes the real time trend's up, the daily, weekly, monthly trend's down. It's harder to trade. You don't know if it's going to be a reversal and it's going to go up 8 hours in a row. A lot of times it'll go up for half an hour, and then reverse because the longer term trends are down. But when all the time frame trends line up, you have much easier chances of trading.